Let's go out there. It's Tuesday, May 31st. And I'm Frank Curzio. It's the Wall Street Unplugged podcast where I break down headlines and tell you what's really moving these markets. So I guess everything's perfectly okay now. Just went through 7 straight weeks of declines for the S&P 500. It was 8 straight weeks for the NASDAQ. But those 7 straight weeks for the S&P, that's rare territory. They only happened 4 times since 1928. The last time it happened was 2001. Before that, it was 1980, then 1970. Those are the 3, even 1970, I would say recent. The other one's much, much further back, since 28. But if you look at those 3 time periods, 2001, 1980, 1970, when we saw this, 7 straight weeks of declines for S&P 500, 6 months later, the average gain was close to 12% during those 3 time periods. So what happened last week? The major indices, Dow, NASDAQ, S&P 500, all surged more than 6%. That was in just 5 trading days. So we're halfway there already. That's how the markets move these days. Huge, 6%, huge, right? I mean, you might be nothing because we're down so much. So we're still down even after this. But pretty crazy moves. Not too surprising though, right? And we talked about this past 2 weeks where the Russell is trading at levels never seen before. And I'm going back to 2004 with my systems. I track this, but that was based on a PEG ratio, price to earnings growth. When you're looking at that, I mean, it was trading at levels I've never seen before. Okay, you can say, well, earnings, and then you have the growth factor in there. That was after Q1 earnings. This is after these companies, some of them guided, most of them guided lower. So they're adjusting those earnings. But still, when you see a level like that, and it's comparable, and you've never seen at those levels, with a lower PEG ratio, the better value it is based on growth, it's the lowest it's ever been. And it wasn't even close. But even if you just take the PE basis, and you've been hearing this in the media, most of the major indices are trading at or below March 2020 lows, which was COVID, and March 2009 lows, which is the credit crisis. If you look at those conditions, and much, much, much worse than what we're seeing today. I know that may be hard to identify because you're like, well, inflation's through the roof. Look at the Russia war. It's pretty crazy out there. We had the Fed tightening. When stocks getting nailed, it's insane. These are all things we could see. And I know with the media, everything is amplified at times a million. So it scares the shit out of you, right? That's what the media wants to do. This way you watch as much as you can. People don't like to watch the news when they have, hey, a little happy story of kids going to school. It's so pretty. No, they like to see anything that's going to anger people, right? That's what makes you watch the news. So they're going to highlight this, and right now you think things are absolutely terrible and the world's ending. But you forget how bad it was. During the credit crisis, the whole world was collapsing. I was working on Wall Street at that time. People were literally under their desks. I'm not even kidding. They were going to the banks to take out money. I was thinking about it. You look at money market accounts failing, companies can't pay this commercial paper market, but nobody knew the extent. We thought it was over when Lehman, right? Lehman failed and the markets came back, and all of a sudden everything froze. And nobody knew what was going on. Nobody knew the extent of AIG. I mean, that's when it gets scary. And then you look at COVID in 2020, lockdowns. I mean, people were dying. At the beginning of that, when it happened in New York, nobody knew, right? So they took people and put them in retirement centers or health centers and you know, for old communities. And, you know, nobody knew, regardless. Everyone's going to deny it, but that's exactly what happened, right? We just put them in nursing homes, nursing facilities. And, you know, COVID, that's the worst thing you could possibly do. Again, I'm not blaming anybody or anything, but it resulted in almost 1 out of every 10 people dying that got COVID. That was the statistics early, very, very early. When you look, it was crazy. I mean, so you have these lockdowns where companies with little online or e-commerce operations saw 90% revenue declines. I mean, nobody models for that. I mean, it's automatic bankruptcy, right? Yes, we had the government spend money and PPP loans and stuff like that. Hand out checks directly to people. We know what that's led to now. But nobody models for that. We're a complete shut-off of your business over a time period we don't know, and based on what political party it mattered, you know, what states are. It wasn't like one blanket, hey, this is the data, this is what we know, it's about health, here's what. No, it was based on political lines, right? If you look at the states, red and blue, You look at the policies, they were basically different for those two, which is crazy, right? So it was all political. It politicized the whole freaking thing. But nobody knew the extent of it compared to now. All these things we could see. We know inflation. Today, we're seeing companies lower or adjust earnings. It was 70% of companies that provided guidance this past quarter, which is Q1, actually lowered their numbers, as according to FactSet. So they lowered their numbers, which is a good thing. They're lowering their numbers. Yet these earnings are still expected to grow 10% this year. Higher than average. Profit margins are above 12%, higher than the 5-year average. Sales grew 13% year over year, higher than the average. The 12-month forward PE is 17, below the 5-year average of close to 19. That's right now. Not only that, balance sheets are flush with cash. S&P 500 companies are holding close to $2 trillion in cash on their balance sheets. And there are over 215 companies in the S&P 500, and this was as of last week. Probably a little bit low with the recent rally. But over 215 companies in the S&P 500 that have 25% or more of their market cap in cash. That's insane. What's that going to lead to? Huge M&A opportunities, especially with so many names still down 35% plus from their highs, even after the rally. I'm not telling you everything is rosy. It's not. It's going to be choppy. I mean, the EU just placed new sanctions on Russia, which resulting in oil surging again. Was it close to 120? Gasoline prices surging, record highs. But the EU is banning most Russian oil imports by the end of the year. Which, by the way, when you look at the details, in order to do that, it required the approval of all 27 member states of the EU. All 27 members. I find that funny. That not one member of those states was like, oh, hold up, wait a minute. I know this makes for a great headline. EU united against Russia, trying to destroy Russia. But we do import 36% of our oil from Russia. We have no idea where we're going to get the supply from. So isn't this shooting ourselves in the foot? You would think one member might say something like that. No, absolutely not. Doesn't matter. Everybody hate Russia, go against Russia. Doesn't matter. But where will the EU get its oil from? It's a pretty good question, meaningful question, isn't it? That's why you've seen energy prices go crazy as the market opens. But where are they going to get their oil from? Let's talk about that. OPEC. Oh, no. Sorry. They already said they're not going to increase output, which makes sense for them. They love to see higher prices. But they already said, no, we're not increasing our output. We're going by original deal and we're sticking by it. But even if they did, even if OPEC was like, okay, guys, you know what? We're going to help the world because we love the world all of a sudden. They can't make up the difference. And recent sanctions by everyone against Russia is taking around 3 million barrels of Russian oil per day off the market. OPEC produces 10 million right now. The max capacity is 12 million. So even at max capacity, OPEC can't make up the difference. That leaves the U.S., which has massive fracking and hydraulic. Holy cow, horizontal drilling. Revolutionary. We told it causes earthquakes. People are dying. It kills animals. All bullshit. All bullshit, right? We were told, like, lies. We were told. Trust me, I've been there. I thought I was going to see dead animals. I've been to every major place. It's unbelievable, the bullshit that you hear when it comes to the EPA and what people worry about. But we have all this oil. We got to produce this? Nope. We can't. Too much political bullshit. Where climate change is going to trump Americans sleeping on park benches because they can't afford to pay their energy bills or drive anywhere with gas prices at record highs. But the U.S. is smart. They're really smarter politicians. You know what? So they call Venezuela and Iran. Right? Both are in bed with Russia and hate America, by the way, right? That's who they're calling to increase output. Like oil produced in Venezuela and Iran is some kind of super special blend that doesn't hurt the environment as much compared to oil produced in the U.S. What a fucking joke. I mean, they're really saying to Americans, all right, we know you, everyone in America is a freaking idiot. All you guys are idiots. You guys don't know better. That's what politicians are saying about us. You're idiots. So this is what we're going to do. We want to get reelected, and we know that our base just hates fossil fuels, so let's produce it someplace else. Even though we're trying to save the world, right? Climate change, the world's going to end, right? A couple of years, it's going to absolutely end. We're all going to die, right? Based on their science. But it's okay for China. We'll let China produce all the coal in the world and get much, much more powerful. Who cares? Because I guess their pollution doesn't affect the environment as much as ours. I guess. I don't know. And we're going to turn to Venezuela and Iran? Really? Are these places that you would even visit as an American? I mean, holy shit. Anyway, so where did the production come from? Who knows? Doesn't matter. EU's united against Russia. Well, united against Russia, it's awesome. But that's why you've seen oil approach $120 now, gasoline over $6 in California. In California? Highest prices? Kind of deserve it, right? You guys really out there with this climate change shit, right? This is what you want. That's cool. Not all of you. I have a lot of friends in California. I think it's a beautiful place. I'm just saying, the politics there, that's what you want. That's what you asked for. This is what you knew coming, right? Before you decided this, right? This is what you see. And it's pretty easy. It's very easy to figure out that this is going to happen if you cut our fossil fuels. And yes, you can blame the war, blame whatever, and COVID and everything come back on, whatever. But, I mean, come on. You saw it coming. But forget about your politics or whatever. Doesn't matter. This is what's happening. You can see energy prices go higher. Then we have food prices. And whoa. Food prices, look out. Because we're seeing a surge in demand for grains, coupled with very little supply, mostly due to Russia sanctions. Belarus as well. Now, I covered this a couple months ago. I said, buy a fertilizer company, buy a fertilizer company now. You'll thank me. Because you got ammonia, potash, and diammonium phosphate. Just those are the three. You don't have to memorize them. You just have to know that they're primary nutrients used for fertilizer. And prices are up anywhere from 60% to 105% from their 2016 to 2020 average price, according to Jefferies. They're surging, which means farmers can't afford these prices. So they're not using as much fertilizer. They use less fertilizer, which lowers the crop yield. Again, fancy term words and stuff like that. Just know that they're not producing enough crops right now. So in short, we see massive demand for food and grains, and we have very little supply, which means prices, which already surge, you haven't seen nothing yet when it comes to food. You haven't seen nothing yet. There's going to be massive, much, much more. You're going to see increasing much, much more in the coming months. So you got energy and food. Again, not going away, that inflation anytime soon. I saw that firsthand this week, actually yesterday. Got a babysitter, which is my mom, to watch the kids. So my wife and I just took a little time. Since we go away every single weekend for the kids. So we said, you know what, let's go to St. Augustine and hang out a little bit. I think old St. Augustine's really nice over there. They got stores. Go to probably every 4 or 5 months or so. So filling up the car cost $100 to drive there. And then we ate at the pizzeria in St. Augustine. This is the old St. Augustine, right? All the shops are. But it says it was voted number 2 in the U.S. by CNN as the best pizzeria. So I've always seen this over the past couple of years that we've gone. And of course, when you get closer, because there's always a long line that goes out the door, we noticed that number 2 ranking was back in 2015. So great marketing by then. And while the pizza was good by Florida standards, it was very good. I got a chicken Parmesan slice. A slice with chicken Parmesan on it. It cost me $10 for the slice. $10. They didn't have prices anywhere. So a chicken Parmesan slice, a regular slice for my wife, and we got a potato ball, which you never see, like potato balls or potato sticks and stuff, which you don't really see in Florida ever, but they have in New York pizzerias. So we said, let's get this potato ball. So potato ball, regular slice, chicken Parmesan slice, and 2 fountain drinks, $30. We didn't get a pie. We got 2 slices, $30. And this place only took cash, and that line literally out the door. And it was 8 p.m. when we ate, and that line was out the door. Holy cow. I'm talking about business to making a fortune. There you go. So you've seen food inflation, energy inflation firsthand. However, inflation for almost everything else is moderating. We saw that with Walmart, Target, so many companies on that conference call saying, wow, we got a lot of inventory in because supply chain was so bad. Now we finally got some inventory in, but demand has slowed. Even saw that from some semiconductor companies as well. Even Apple's talking about it. That means these products in inventory are going to need to be sold at a discount to get them off the shelves, which helps lower inflation. So you're going to see that, and that's really what's sparking this right here. So we separate the core, right? We have the CPI, then the core CPI, which excludes the volatile food energy prices, which is not volatile. It just keeps going up. It's not up and down, up and down. No, it just keeps going up, 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 up. We're going to exclude that. And excluding those two, we're going to see inflation moderate. We will. We've seen it from a lot of companies. They don't have pricing power as much anymore. Some companies still do, but not all of them. And watch the restaurants. Some of them held up well. They've had pricing power, but they're going to have to raise prices again. And how much could you pay for a family? Is it going to be $60, $70 for a family of four to go to Chipotle? Well, I'm used to paying $45, $47. I don't know. But there's a price where people are going to be like, I'm done. I'll make my own chicken and rice in a bowl at home. I'm done. We're pretty close to that right now. As for China, which has also been a drag, right? It's starting to reopen slowly after the crazy zero tolerance I can't even say it, but zero tolerance COVID policy. So it's a full lockdown policy, full lockdown. And I've seen pictures of this. I've heard from people in China. It's fucking scary in China right now. It really is in a lot of areas. I mean, these forced lockdown, you're seeing people rise and like, we're done with this. But the good news is you're seeing the numbers get better. You're seeing the reopening. So Shanghai, there's companies that monitor the electricity consumption, which is home to the city's large industrial enterprises, but it climbed in May. It's now at 83% of 2021 levels. So it's trending in the right direction, which means things are starting to open, which may ease or help ease supply chain concerns. Again, another positive. With the Russia war and Ukraine still a wild card. Will end eventually, but it's still a wild card, still a lot of uncertainty there. But overall, I'm not surprised by the huge rally last week. And we're incredibly oversold to the point where a lot of great companies, industry leaders, were trading at insanely cheap valuations, which tends to happen when? During deleveraging periods, when people are forced to sell. When you're forced to sell and you're getting margin calls, you're selling everything. You're selling your good assets. Doesn't matter. I just got to get out of here. I got to get to the market. I got to raise cash. When everyone's selling, no matter what stock it is, that creates unbelievable buying opportunities. We recommended 3 new small cap stocks last week in Curzio Venture Opportunities. Already up nicely on these names, even though we are seeing a little bit of a pullback today. Oil companies are holding in there, and agriculture companies doing well. Mosaic's up. Also seeing a nice bid for crypto, which is pretty cool. Back over 30, holding 30 despite Luna, despite all this, and crypto's going to crash, and it has crashed already. It's been holding that $30,000 level, and we talked about the trillions of assets coming into this industry now with retirement funds opening up the door to crypto and Bitcoin. I mean, that's huge. You're going to see money pour into this. People want it, and now the fund's like, okay, if these guys want it, this is what we're going to do. But Bitcoin, maybe Ethereum be open, Cardano, some of the bigger names, Avalanche. But you're going to see institutional money start flowing into this industry, and it's holding here despite, it's been below 30 several periods over the past, I would say, month, 2 months, and it's been holding pretty steady here, which is good. Now it's up nicely today. But we did recommend 3 new small caps last week, Curzio Venture Opportunities. Again, ready up a little bit on these names. Well, a little bit. But for me, I rarely recommend, those of you know me by my products, I rarely recommend more than 1 stock a month. Right, in each monthly issue. So we did it twice near the bottom of COVID and CVO, twice in Curzio Research Advisory. I think I recommended 5 of the companies, whereas Walmart, Home Depot, Costco, Target. I forgot the other one, but those basically the 5 places that were allowed to stay open during COVID. So let's buy these. Did very, very well on them. Sold off most of these now. We held on to Target, so we got hit with that 25% loss. We were up a lot. We were up huge on Target. Really, bottom ticked those names during COVID. But now that's how I feel about the markets. If we'll recommend that many stocks right now because of the levels that they're trading at are absolutely insane. It doesn't mean that they can't go down from here. And we did stop out of several names, to be fair, during this 8-week downturn, right? We limited our losses in products. In Curzio Venture and Curzio Research Advisory, we had to, and it gets ugly and crazy there, and a lot of those names are down much, much more, right? Again, everything just completely sold off, didn't matter. Even the FANG names are down 35% plus, some of them. But my point here is that bear markets are great for investors who are prepared and have cash on the sidelines. Because that allows you to buy a lot of those great names at steep discounts. And right now, even after last week's 6% surge, many industry leaders, well-capitalized stocks that are growing, good growth models, good management teams, good balance sheets are trading at significant discounts to the historical average. And that doesn't even sound like too enticing. So, they're trading at levels, and pre-rally, they were trading at levels that we haven't seen, again, since lows of 2 of the worst periods in the last 12, 13 years. we shouldn't be that bad. It's scary out there. Yes, we have inflation. Yes, the Fed's tightening, but it's definitely not as bad as then for a lot of these names. So it's going to be choppy, but start picking away. Don't go all in. Just start picking away. Maybe a third of position, 25% position. Build it up. If it surges from here, you own it. If it goes down, you could buy more, lower your cost basis here because you're never going to pick the bottom and sell at the absolute top, no matter how many trading services you see that highlight the line. Well, we told you to buy here at the low part and sell here at the top. And they circle it, in the commercials and shit like that, right? All these freaking traders. It's awesome. It's awesome. Love it. Love that part of our business. But it never happens, right? It never happens. But buying some of these stocks down at these levels, 35, 40%, with inflation, it's going to moderate. The war is going to end. That's temporary. It's been a little bit longer than expected. The Fed expected to tighten, but they're probably not going to tighten as aggressively after they get to 2.5%. Still a little ways off that. But once we get there, now they're going to have ammo if they want to cut, which there's several firms, investment firms that are predicting that 2023, the Fed's going to start cutting. And they may cut if inflation does moderate that much. So there are positives, right? A little bit. There's positives. But throwing in how far and how big this downturn is in stocks, a lot of that is being factored in right now. A lot of it's being factored in. Almost every risk that people talk about are risks that we've been talking about for months. What usually means it's factored into stocks. So seeing a little bit of give back today. That was down 400 when I started this, down about 190 now. We'll see a little bit of give back, but there's still so many names, especially in small caps, that are trading at levels. And biotech, holy cow, biotech has gotten annihilated. You can buy great companies generating revenue. I'm not talking about a biotech with, just one drug that you're praying for. It got through phase 1, it gets through phase 2. You're going to earn 5x or 3x or whatever. It's going to go a lot higher. I'm not talking about one product. I'm talking about very good biotech companies generating revenue that are trading below their cash on their balance sheet. And that industry's gotten annihilated. I don't know how much leverage was in there where people are selling these names. It's insane. But that's where you could find. Again, you have to be willing to risk. You take on a lot of risk, but the return, it could be massive from these levels of what I'm seeing. And one of the names that we did recommend in Curzio Venture last week was a biotech name that's generating significant revenue, great portfolio of names, partners with just about almost all the major pharmaceutical companies. And trading at levels down 80, 90% from it's insane. But that's what you see. That's what you see during times like this. So I know it's difficult. I know people are nervous out there. And yes, you did get a little relief yesterday with that rally. But that's what happens. You're not going to catch the absolute low, but start picking away. A lot of this is being factored in. It's going to be choppy over the next 6 months at least as we see oil prices continue to rise, as we see food prices continue to rise. But once those level out, if they level out, we could see the market really, really take off from these levels. So tomorrow, Dan and I are going to be taking some of your questions. So please send them to frankcurzioresearch.com. That's frank at curzioresearch.com. And still getting tons of questions about our Metaverse deal. It was the holiday weekend, so a lot of you fill out the paperwork and say, hey, Frank, I'm getting the funding. That's fine. You guys are good. It's not a problem. I'm going to keep it open for a little bit longer. If you don't know, we purchased, this was last week, we officially announced a $5 million deal to purchase virtual commercial real estate in TCG World, the largest 4K open metaverse. This marked the largest virtual land purchase on record. So it's a cash and stock deal where TCG becomes an equity owner in our company, meaning that they're incentivized to introduce us to the investment and crypto companies who already bought real estate in their metaverse, which I spoke to a lot of these guys already. And that amounts to tens of millions of new investors right now. And put that in perspective, just 0.25% of those people signed up to Curzio Research subscription will increase our subscriber base by more than 6-fold. So it's more than just a virtual real estate deal and metaverse. I'm talking to a lot of investors and they're excited about it, but we have the core of our business, which is selling subscriptions, educating people on crypto and stocks and getting them in at these levels. I mean, getting a lot of these people in at these levels is going to result in us having clients for a very, very long time. All right, this is where you want to get people in. Yes, again, it could be choppy, but right now there's a lot of discounts, a lot of good ideas out there. So when we look at the virtual real estate deal, we paid $125,000 for each 128 by 128 plot of land. If you do go to TCG World, take a look. It's amazing. But we own 12 of those city plots and another 7 256 by 256 city plots, right? But just a 128 by 128 plots, like commercial city plots, right? So those 12 we paid $125,000 for are being listed for over $500,000 right now, which is incredible. So getting in early was key for us. TCG started to get recognized as one of the most exciting open metaverses out there. It's beautiful. People saying it's better than Central Land, which, again, Central Land's good. We have that in our portfolio for crypto intelligence. Better than Sandbox. Starting to see their name a lot in media outlets when it comes to TCG. So, again, that's great for us in terms of the price of our real estate, which is surging right now in terms of the tens of millions of names, which could be hundreds of millions over the next 12 months as we see more and more companies start building in TCG world. So really, really good times. Anyway, I only open this up to my list, and then I'm going to open it up to funds. I have a couple funds that are going to come in, that announced that they're going to come in. But, we're raising capital for the deal, so you have to be accredited. It has to be $25,000 minimum. Will you be able to purchase our tokens and get a 30% discount to where they're trading right now? Now, Curzio Research token is like a stock, give you direct equity in our business. So I know a lot of you have come in. A lot of you are still funding because the holiday weekend, banks are closing and stuff, and that's cool. If you still want to come in, I'll keep it open pretty much through this week for our list only, and then I'm going to go outside the list. So if you're interested, you want to learn more, just go to CurzioEquityOffer.com. It's www.CurzioEquityOffer.com. We have a subscription agreement there. We have all the details. And if you're serious about coming in and you have more questions, which I'd say about half of the investors did, send me an email, frankcurzioresearch.com. I'll hop on the phone with you personally. And that resulted in some people coming in and some people being, not too much. And me telling them, maybe this deal's not for you. So again, I want you to if you come into this deal, have a long-term outlook, be perfectly comfortable with it. It's not a sales pitch at all, but if you have questions and you're thinking about it, let me know, because this is only available to our list right now. After this, I'm going to go out to funds, and I already have 2 funds lined up that want to come in, which I'm really excited about, and I'm sure more are going to come in based on where the real estate is and based on just the amount of names we're going to have access to, which it would cost us more than $10 million to build a file that big through traditional advertising channels. So definitely a game changer for our company. Very exciting times. I know a lot of you have come in already, and I appreciate it, and that's awesome, and I'm going to do everything I can to make that one of the best investments that you ever make. At least I'll go down fighting trying. But really exciting times for us. And if you're interested, again, just feel free to email me, frankcurzioresearch.com, or answer all your questions at CurzioEquityOffer.com. So that's it for me. I'll be back tomorrow answering questions with Daniel, who I think's been on vacation for like 2 months, I think. Gotta be busting his balls tomorrow. I'll have some fun. So again, send those questions, frankcurzioresearch.com. Let's go Rangers. Amazing Game 7 win. Beat the shit out of Carolina. You kind of felt that way after Game 6, right? At home with Rangers. And Game 7 was at Carolina, but man, they look really, really good. And they were just, I mean, okay, you had some people hurt Carolina in the game, but Rangers look very, very, very good. But Tampa's next. Tampa looks absolutely great and fantastic. Tampa beat us last time to get to the championship game, so it will be interesting. It will be a good series. And the Rangers look good, so very exciting times for the New York Rangers. But I'll see you guys tomorrow. Take care.